We are only hours away from one of the most monumental events in cryptocurrency history, the merge from proof of work to proof of stake for Ethereum. Now, I don't want to get into the nitty-gritty details about it because there's so many other videos covering exactly what the merge is going to do, what it means, and how it affects cryptocurrency. But I want to talk about the short-term price action of what could happen to Ethereum and possibly what is most likely going to happen to it. So let's dive into the charts and talk about it a little bit. So Ethereum merge has been anticipated for many months, and as we go into the charts, you're going to see how the price action has played out and some things that we've seen in the past that could lead up to what's going to happen in the next 10 to 12 to 24 hours for Ethereum. Now, before we actually get into it, if you look up on Google just Ethereum merge, what you're going to see is that we're around 10 to 12 hours from this, at least at the time of making this, and it's around 4 p.m. Central Time, so probably, around midnight or something, this merge is actually going to take place. So by the time you're actually watching this and when the merge actually happens, if you're in the United States, you're probably going to be asleep. So I would highly recommend not trying to stay up all night and trade this thing, as we're going to talk about in a little bit. On top of that, when you actually go to the ethereum.org website and you talk about when is the merge going to happen, it still now says around the 14th or the 15th of September. And if you really want to get more technical, you can look at the milestones for total difficulty right around here, which honestly, I don't even know what this is, but if you're smarter than me, then you can definitely go to this over here at the merge. But what we are going to talk about is the price action of Ethereum, what could happen, what we saw yesterday with Bitcoin and the CPI data, and probably what's going to happen right here. So as we're making this video, Ethereum is currently sitting around $1,600. And as you can see, the chart marked up right here, what we have is we're kind of in this zone. So one thing that we could have seen is that if Ethereum was right around here at the top of this trend line or this resistance zone, maybe what could have happened during the merge is we could have popped above, retested, and then reached around 2,500. Maybe if we were down around here, this would have been a really great level to trade off of. So, we had a reason to skyrocket. But as of right now, we're in this weird consolidation zone, but we're in the middle of it. So as of right now, honestly, anything can happen, and that's also another really big reason as to why trading Ethereum during the merge is a really bad idea. So one thing I really do want to cover is that what I think is going to happen. Now, let's talk about two possible scenarios. Ethereum goes well, the merge goes without any problems, any flaws, anything like that. Maybe there's a lot of hype and Ethereum gets pushed up, but it's immediately met at this resistance of around $2,000, which again is another psychological level. So it's going to see a lot of resistance here. If there's enough liquidity to push it past, then what we can see is a possible second push or possibly one very large push to 2,500. At this point, I don't think there's enough volume or liquidity, at least in the medium term, to sustain 2,500 for Ethereum. Now, long term, I think this merge is extremely important, but when you're talking about price levels and short term and everything happened in the macroeconomics and the global economy and everything like that, Ethereum really doesn't have enough liquidity, or the markets really don't have enough liquidity to sustain this kind of a movement and continue to move higher. So best case scenario, short term, Ethereum goes up to 2,500, breaks through this level, and maybe starts to consolidate in between $25 and $2,000. Now, this is what I think is going to happen. With any possible bad news coming out for Ethereum, what we could see is that maybe we have a fake out to the top, and then immediately we drown down to around the $1,200 to $950 support level. Because if anything goes wrong with this merge, there's going to be a ton of haters coming on, selling off. There's going to be massive sell pressure. Everyone's going to say that the merge didn't work, Ethereum is dead. A bunch of Ethereum killers are going to take over, and this is why Ethereum can't work. Now, also, there's going to be market manipulation. When we talk about market manipulation, what we can take a look at is literally yesterday with Bitcoin and what happened with the CPI data. Now, let's go into Bitcoin on the hourly chart, and let's talk about a little bit why it's a bad idea to trade these types of news events. So right here, let me mark this up for you guys. Right around here is when the CPI data came out. Yesterday at around, I want to say 8:30 Eastern time in the morning. And typically what happens during these events is that if you've ever traded, or if you've ever day traded, or kind of short or medium term invested, or anything like that, you'll know that there's a spread involved, especially in leverage trading. So typically what happens is that there's a spread or a bid and ask price, and a lot of short-term traders, what they will do is that they'll try to catch these news events. So you'll have long and short traders, or buyers and sellers. And typically what happens is that what we'll get is market manipulation from the whales. So as you can see in a short-term trader's view, this is a very strong resistance zone right here. And maybe a lot of traders are like, hey, I'm going to sell this because I know that the CPI data is going to be bad. Bitcoin is going to drop, and we're really not out of this recession yet. Inflation is getting worse. And so what they do is they stack a bunch of money right over here. They stack sell stops, or they sell right here, or they leverage their accounts right around this area. And right before the actual thing, two things happen. So there's always market manipulation. What you'll get is kind of like a whiplash. So the markets will come up and then down, or down and then up. And that's because it takes out the short-term traders in both directions. If it goes down, it takes out the shorts, and if it comes up like in this wick, it takes out the shorts. So typically what happens is you get a bunch of sellers who were correct. So the first thing is that there's the whiplash, and the second thing is that there's a bid and ask spread. When you're trading, the bid and ask spread can be very tight, but during volatile news events, something like the CPI data that has been very anticipated by traders, the bid and ask will then turn into something like this, with a massive spread in the middle. And typically, if your, let's say, stop loss was right around this area, let's turn it red. Let's say your stop loss was just above here, and then the bid and the ask goes even higher, then you are captured within that, and then you are taken out of the market because your leverage trade was taken out, you were margin called, you were just incorrect for that brief second. And then what happens is, even though the market generally goes in your direction and you were correct, you're still taken out of the trade because of the market manipulation, the huge difference in the bid and ask spread. And that's exactly why trading these news events is a no-go, and it's a really bad thing. Now, on top of that, when we're looking at the Ethereum Bitcoin chart, one thing that's very interesting is that we are in this very strong reversal zone on the daily. Now, you could see whenever Ethereum gets to the point where it's almost 0.08 times what Bitcoin is worth, either in terms of market cap or price, then what we see is this massive reversal zone. Now you can see the first time that it got up here was in the middle of May back in 2021. It has been up here multiple times before, like right over here, but we're just going to focus on 2021 and 2022. So the last time it was up here, you can see that we had a reversal right around here of 33%, which means Ethereum's market cap or its price compared to Bitcoin dropped 30+%. The second time we even got close, we had another dip right over here. And then the third time we had this dip, but even if you map out the entire thing, that's around 43%. Now what is actually happening right now is we just got into it. This was the Ethereum Merge anticipation coming back all the way in the beginning or early stages of August. And now we've seen Bitcoin start to take power back over Ethereum because we're getting extremely close to the merge. And yes, if we go back to the Ethereum charts, we've seen that over the past months, if we take a look at where price, if we go all the way from the bottom at around the middle of June and take it all the way to the top of the middle of August, we've already risen 115%. And since then, obviously, we've had the merge come in, people kind of anticipating it. And from its lowest point to right around here in mid-June, it's already dropped 20-something%. So to say that Ethereum can, bounce up to 2,000 or 2,500, from this point, it's going to have to do another 50 to 60 plus, which is going to be extremely hard, especially when you're looking at Ethereum compared to Bitcoin. I think a lot of people, since Bitcoin has already had the CPI data come out and it has been bad, that bad news is already out of the way and it's been marked into Bitcoin's price. We are still uncertain of what Ethereum is going to do, so there's still that uncertainty and no one really knows what's going to play out here. And so what people are going to be doing is that smart traders and long-term investors are going to be moving their capital from Ethereum to Bitcoin, at least for the next week or so, to let the merge volatility settle down. So if you are a short-term or long-term trader, I would highly suggest not getting into this, because even if you are correct during this entire thing, just like we saw in Bitcoin, you can still lose the trade even though your thoughts may be correct. Why? Because market volatility and market manipulation can do this. No matter where your stop loss is, even if it was above this red line, the bid-ask spread can still get extremely big and take you out. Even if the markets or the wicks don't tell you that you've been marked out, you can get taken out of the market because of some insane crazy spread, which again is market manipulation. So as we take a look and wait for Ethereum, I would highly suggest that we stay on the sidelines. Unless you really just like gambling, then go for it. But I think in the short term, when we're actually taking a look at what could happen to Ethereum, I think the most likely thing to happen, in my personal opinion, is that we can see something happen wrong with the merge, or even if it doesn't, we just get bad news and we get pushed down to around this 1200 zone. And this is kind of where this massive accumulation spot is. So for me, I do have some buy orders or buy limits right around below this level, right around 1350, and then another one right around here at 1200, mainly because that's where I think Ethereum is going to fall. Now, if it falls a little bit lower, I'll be ready on the side with some cash, but I don't see a lot of good things coming from this merge in the short term. Now, that's everything I have for this video. If you guys enjoyed the little breakdown, the little synopsis of what I had on the markets, definitely subscribe down below and make sure you stay up to date for more daily videos. Till the next one, see you guys then. Peace.